The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
We got Carlos from California. Carlos, what's happening?
How you doing, Tom?
I'm doing great,
How are
man.
you?
Yourself?
Oh, very well, thank you.
That's awesome,
Thank
man.
you very much. Can I make a comment real quick?
Absolutely.
For me, it's a real challenge every time I'm doing a trade. And thanks to your help, I've been able to done a lot of things as far as trading. And I know there's a lot of Hispanic people who's listening, and they think this is a lot harder than it looks. But with your help, it's been a lot easier to make things sound very simple.
That's a beautiful thing,
okay.
man. Well, listen, we appreciate it. We appreciate it.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't make assumptions. Learn to ask questions. It is always better to ask questions than to make an assumption. Have the courage to ask questions until you're as clear as you can be. Once you hear the answer to the question, you won't have to make an assumption because you'll know the truth. That's if they tell you the truth, right? Market-wise, let's take a look at it out here. We have the Dow Industrials down 48. NASDAQ off 34, S&P's down 9.5. Gold contract down $18.20, trading at $1,327 an ounce. Silver down 40 cents at $18.52 an ounce. Platinum off 23 bucks at $1,080 an ounce. Copper down 3 pennies at $2.08 a pound. Light sweet crude off $1.43, trading at $46.67 a barrel. Bonds, 10-year note flat 132.07. 30-year bond down 6 ticks, 172.08. King dollar up 253 ticks, 94.74. The euro is trading at $1.12, and the yen is trading at 100.48. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so you're down a buck. You really got a sideways market out here again today. We've been going sideways for 14 days. You have 41 million shares on the way down. Bottom line, we're going to have a little expansion of volume out here. What I do expect you're going to see is a little more of a setup tomorrow to basically sell the market. And I expect what you're going to see Friday, 10 o'clock in the morning, good old Janet Yellen. Whatever she says, folks, I suspect the market's going to take it that we're going up a quarter point in December. Why? We'll let you know in 1 second, but we're going to do the Qs first. We take a look at the Qs. The three Qs, what you have is this. Another sideways move. You do have 10 million shares traded. We'd made a high yesterday with 11 million. Let's call it 12 million, okay? We're at $116.75. My take is we're going to get an expansion of volume, and this baby's going to get hit. Why? Let's go over the gold contract first. The metals, folks, the gold and silver equities led it. The metals are going to be next, and the metals are saying that the Fed's going to raise rates by 0.25%. So this is what you have. We've had a sideways move in the actual physical metal. Today, it's down 18 bucks, which is not a huge percentage move. You have the volume coming in. We've already done 201,000 contracts. That is saying it's going to go after $1,318. Now, we're down 18 bucks today. I suspect we're just going to blow that away. You're going to blow that away. I suspect we're going to trade somewhere down to the 1280 area. Now we get serious. Now I go over to the XAU and the HUI. They're taking these equities apart, folks. I mean, big time. And this is what they do inside the gold and silver market. It's beautiful on the way up, and it's a disaster on the way down. Particularly, we were up 200-300%. Bottom line, what you're doing out here, the XAU is down 885. You're breaking the swing point of the 25th, and you're taking it apart like nothing. Bottom line, I suspect this XAU is going to make its way down to the 82 area. Right now, you're at 95. So guess what? We're still at highs. The HUI, we take a look at the Gold Bugs Index. Gold Bugs Index right now is down 20 bucks. You're at 236. This is also taking a swing point apart in spades. And the Gold Bugs Index looks like it's going to run into this 205 to 199 area. Right now, you're hanging out here at 237. Big numbers, man. Big numbers. Now, those numbers, too, by the way, are not dramatic as to how we went up from January to June versus what the pullback is all about. Oil. Let's go over to the oil market. We see with oil. Oil's got a couple things going for it that could be really a problem. And one of them is this, okay? So check it out. So the oil numbers come out today. Bottom line, market sold it down a bit. Nothing heavy, $1.43. You've done, however, 564,000 contracts, which is good contract value on the way down. What I expect is going to happen, let's go over to the dollar, is where the pressure is going to come in, is that if, in fact, Yellen has any clue whatsoever, DXU, that rates will go up in December, you're going to see some strength inside the dollar. Right now, we're up 256 ticks, which, is not huge, folks. It's certainly not a sign of strength. What we have done, though, is that we've got inside a higher range. So I expect what you're going to see right now, we're at 94.75. This dollar wants to make its way back up to the last swing high, which is on the July 25th, which is the 97.26 mark. Silver, we take a look at the silver market. What we have with silver is this. Silver had broken down first. Silver gave the clue, gave a good clue on Monday. Let's see, today's Wednesday. On Monday, that's when it broke lower, broke the whole consolidation, did 91,000 contracts. You're doing an additional 69,000 right now. Bottom line, silver is making its way down to this $18.07 area. Right now, you're at $18.52. So bottom line, now let's go over to the IBB, because what I expect you're going to see, folks, is this. The IBB, this is the biotech index, right? Monster move today, try to make a high, and this is the third time it's trying to make a high, folks, since the 15th of August. Try to make a high, couldn't handle the high, and get a vicious sell-off. We just went, it hit $299 this morning. Bottom line, you're at 286. You're taking everything out, toasting and roasting everything all above. Your bottom line, a close under 289.70, which we're at 287, will send this thing down to 240. You're talking about some big numbers here. And what I expect you're going to see, and this is how markets most of the time top out, what you have one sector that starts to give it up. It's a slow roll, and that slow roll happened to be, in this particular case, it actually was, let me bring over the XLE first. It was actually the XLE that had the slow roll and then came all the way back. The XLE was the first sector in July that did the slow roll. Then it came back and hit the high. Then you had the metal, the gold and silver. That slow roll. Then what you have today is now you have the velocity of the move. The velocity of the move in the gold and silver, the velocity of the move in the biotechs. I expect Friday we're going to have the velocity move in the whole market. Stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow right now is down 54. You get the NASDAQ off 43. S&Ps are down 10. Let's go over to our man, Mr. Larry Pesavento. Now, every trading day, folks, 9 to 10 Eastern Standard Time, Larry's got an outstanding show right here at TFNN. And remember, if you're listening in your car radio right now, you can get us 24 hours a day right on your cell phone. You go to TFNN.com. You can just hit Tiger TV, get some great audio and video. Our man, Mr. Larry Pesavento, tonight, great night for it, too. High volatility in the marketplace. They're killing the metals. They're killing the biotechs. I expect they're going to be killing the whole market in another 48 hours. Bottom line, Larry's going to be doing a workshop tonight for his subscribers. He's got a great newsletter. It's called Fibonacci 24/7. The workshop tonight, the title is The Classic Techniques of the Old Masters. We're going to let Larry tell you about it right here, right now. Larry Pesavento, what's going on?
Hey, Tom, we're finally getting some movement and volatility in stocks. First time in about 4 or 5 days.
Yeah, and there's no doubt. And, you know, bottom line, you couldn't be doing this workshop at a better time, because what does happen, folks, is that once the volatility starts, you know, and it's in 2 sectors right now, guess what? It's worse than the Zika virus.
Oh, it can certainly be. And, you know, so many people, because the volatility index is so low, are lulled into complacency, thinking that volatility can't raise its head, and I think they're going to be unpleasantly surprised. But, you know, we'll wait and see. One of the things I'm going to do tonight is go over some of the chart patterns that have been around since the 1920s that were brought out by Schaubacher and Gann and Cole and Wyckoff and things like this. And, you know, everybody knows the Gartleys and butterflies and ABCDs. We're going to cover some of the others that are good for trading really strong trending markets, which we haven't seen for a while, but they might be coming, you know, back into vogue. We're seeing that, of course, in the metals, which is the first start, and we possibly have one, you know, working in crude oil too. So this is a really critical time for, you know, watching volatility to change, and that's one of the things we're going to be focusing on tonight.
And you know, it's amazing, Larry, and, you know, I know you've seen it 1,000 times, and folks, it's amazing how you can go sideways forever, and then when they take it apart, and you've heard this a million times, man, but when the door closes on the market, guess what? The door is so freaking skinny to get out, no one can get out. I mean, and it's intense, man. Yeah.
This is even worse this time, Tom, because we have no volume.
Yeah.
You've been saying that for months, and you know, the markets have pretty much been telling us that too. But if these high frequency traders, you know, start to push it to the downside, there's nobody in there to, absorb any buying. And boy, this thing could really have a big move down. Remember, this is the anniversary of the flash crash.
Listen, it's just Jesse Livermore. It's the path of least resistance, folks. And guess what? Down right now is the path of least resistance.
Well, and that's, the market made a high yesterday.
Yeah.
Look at this. See, this thing is down, quite a bit in just one day, which is indicative of when a top, finally comes in. But, whether this is it or not, we're still going to have some tremendous, volatility in crude oil and gold and bonds, and there's so many things that are setting up, so nice to be trading. It's really a good time to be a trader for patterns and volatility.
Okay, so what Larry just brought up, folks, this is what you want to wrap your head around a bit. If you're a Fibonacci trader, and you have been a while, you'll know that when these numbers start hitting, they hit in a big way. It's the same with patterns. Depending where you are in your trading career, you're going to love the workshop, but what I believe you're going to get out of this also is that what I've learned off Larry is this. So picture it. So technically, folks, what happens, a lot of this is math, right? What's not math, which Larry will give you, which is so freaking cool, is the tidbits that when you do have that price spread, what does that mean? Because I remember the first time, Larry, I don't know, 10, 12 years ago, maybe 10 years ago, whether in the den or we're talking, and I think I was reading your newsletter, actually, and you were explaining that, hey, listen, man, you get big days like this, man, you got to watch out, because you don't get one of them. They just don't come in ones. You got to actually put a quote in there. I said, ooh, this is interesting, man. Because it's one thing seeing it, but it's another thing really starting to pay attention to it. Do you know what I'm saying? That, okay.
That's correct.
Yeah.
All it does is repeat itself over and over again, and if you start looking for that repetition, you have a big advantage over everybody else.
Yeah. And
they don't realize that what happened in the past will happen in the future, and the same in the Bible as in stocks. It will repeat.
It will repeat. And the thing that's amazing, too, is that you think something it's highs and you think it's gone down. Well, guess what? It can go a lot lower. Just as anything can go a lot higher, markets stretch a lot longer than you think, folks. And what does happen inside some of these patterns that Larry's going to be showing you, it's cool because between a 1.27 extension and a 1.618, it depends on what number, the main number that you're taking that off. Because if you're taking that off a good-sized number, well, guess what? That spread is huge, So it's going to be a wild one, man.
Well, this year you've helped folks with the volume, Tom, and that's a big part of it because that's the engine that, makes the fuel. So if we can start getting a nice volume day, I'd like to see a 7 billion share day in the market, to get players back in again. Even if they're just getting out of their positions, it would tell us something. So
yeah,
I would be surprised because that VIX index is so low that we're going to see some type of an outlier event that could really shake things up.
Right. Well, listen, even today, folks, okay, so the market's not down a lot today. And as one of the Tigers just said in the den, so picture this. The Dow's only down 0.3%, the Nasdaq's down 0.8, and the S&P's are down 0.4. And what he's saying is that it feels like it's down much more than it actually is. And this is what happens, folks. This is the reason. Because we've had no volatility. I saw Larry, it was in '96, I think, right? What had happened, folks, is that everyone was so used to the market going up. The market only took a 12% correction, 12 to 14%, and I saw people get wiped out because the market had never corrected for 2 years. So that was like a disaster because everyone was levered up so dramatically, so.
And we haven't had a correction in 4 years.
No, exactly. I know, man. That's why it seems a lot worse than it actually is percentage-wise, so. Well, listen, 5 o'clock tonight, folks. You can come over to our website at TFNN right now. You can sign up. Larry's newsletter is a phenomenal newsletter. He sends charts out with videos on them, so it's really cool because you can just sit back, look at the chart, look at your own execution platform, see what type of pattern they're talking about. And these come out, folks, every single day, every single night. When Larry's alarm goes off at his desk, man, let me tell you something. The alarm goes off, he sets it up, sends it out. So you get 30 days. It's only $97 for 30 days. You get a money-back guarantee if for some reason you don't like it. You'll also come into the workshop tonight, 5 to 6. If you can't make it here live, don't worry about it because we'll put it on your page. You can go over this as many times as you like for the next 30 days. So this is going to be...
Tom, one other thing I'm going to do, Tom, for the next 30 days is I'm going to do a repeat only with live charts of some of the things that we're going to talk in the webinar. In other words, we talk about failure patterns and how to trade failures, how to trade a strong trending market. Each day I'm going to pick a different subject matter for the video.
Nice.
So folks can review and see what's happening in real life and make them realize that they can do this themselves.
Yeah, huge, man, huge. Come over to TFNN, folks. You're going to see it right in the very top of the carousel. You can sign up right here, right now. You're going to get a great workshop, great experience, great education, 5 o'clock. Larry, we look forward to the workshop, man.
Thanks a lot, Tom. We'll talk to you later, my friend.
Absolutely.
Yep.
Stay right there, folks. Coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 61. You get the NASDAQ off 44. S&Ps are off 11. And what you do have, let's see, and there's plenty of time left here, folks. You get 30 minutes left. What we have had is this. The volume's still light in the NYSE. You get 500 million. On the NASDAQ, let's see what we got here. The NASDAQ, we are hitting right now 1.3. So the NASDAQ has gone up dramatically. And I expect what you're going to see in the next 30 minutes for that volume to expand once again. So if we go over to the Qs, what you're going to see is this. the Qs, they're down 90 cents right now. And the correlation as to, when we just started the show versus now goes like this. We started the show, they were at 117.03. You're at 116, and someone plowed into this and just started unloading some good numbers, meaning some large trades, pushing them out in a big way. We just had one trade come across in the Qs. They sold 243,000 in one shot. Okay, that's a big number, folks. What I do expect you're going to see more of that as we come into the close out here today. And, the setup is kind of like this. The setup looks that, okay, so it's 10 o'clock Friday morning that Yellen speaks. I expect the volatility to continue into the close, the volatility tonight, volatility tomorrow morning. We'll see what she has to say on a Friday, but I do expect what you're going to see is that next week, instead of a calm week, the week coming into Labor Day, that it's kind of like it's game on here for volatility, probably for the next 6 to 7 weeks. That's how it seems to be shaking out here. Some of the higher volume stocks in this market, this is what we have. You have Bank of America is up 7 cents. You got Express is down 3.90. You get Mylan Pharmaceutical off 2.60. We have okay, so you have Marbell up 2 cents. Boeing's off 80. Honeywell's down 16. IBM's off 137. Microsoft is up 5. Amazon's down 4. JP Morgan's up 28. No real monster numbers outside just yet, outside of the IBB and the gold and silver equities. The IBB is taking it on the chin in a huge way. We're on 2.9 million shares. They're unloading this, man. We'll see a lot more unloading as we come into the close, too. And the close, a close under this 287.77 is saying, hey, guess what? You get a high volume swing low at the lows at June 27th, and that can go for that. And that's how the IBB likes to trade, folks. The IBB is a highly volatile sector. When it's great, it's great. When it's getting taken apart, it gets taken apart like nothing you've ever seen. AMGN. Let's just go take a look at Amgen here for a second. Yeah, so Amgen goes down $3.50. Not that $3.50 is a lot. What is happening with all of these that are getting croaked right now is that they also had gone sideways, folks, all of June and July. And what has happened is that they're taking those areas out in 6.5 hours. So this is what ends up happening. This is how selling accelerates. You go sideways. In this case, the S&P's been going sideways since July 14th. So what happens is that if you just go sideways, up and down 20 points, which we have since the 14th of July, no one does anything. You can go long, short, all of the above. When you either go top side and you basically get all out of those highs and you get away from those highs, guess what? The shorts have to cover, and they have to cover in a heartbeat. What does that do? That brings more. The bulls get more confident. They're buying like crazy. They go topside. The short's got to cover. When you go downtown, what ends up happening? Exact opposite. Immediately what happens is that everyone that had bought those positions for the last 6 weeks are in a losing position. It's going south, and there's plenty of folks that get signals as soon as they go south. Then what do? They'll pile on top of it and go south with it. What you do have happening, now this is where this gets dangerous inside all the sectors, and what it has to do with is the ETF ETF structure. So what happens with the ETF structure is this. If you look at the XAU, the HUI, if you wonder how does this acceleration get so fast? Well, what happens, and this is where it's always the chicken and the egg. Okay, if the stocks get sold down, they got to sell down the ETF structure. If the ETF structure gets sold down, they got to sell down the stocks. That phenomenon on the way up is great, because what ends up happening as the equities go up, the company that's running the ETF have to buy the equities. As it's going down, just the opposite happens, okay? So what you will see out here coming into the close today, in between the IBB, in between the GDX, in between the HUI, and between the XAU, you are going to see some heavy selling in the marketplace. That selling will carry over. The reason it will carry over, meaning I suspect it's going to carry over tomorrow. And the reason I expect it's going to carry over, because what you're going to see is a tough night tonight, because what will end up happening is that Australia opens next. That's a mining capital. They'll more likely sell it off there. South Africa opens up next, and then we come back over into the U.S. Now, I know a lot of us trade the direction triples. And so just as a heads up, what's going to happen is this. Tomorrow morning, okay, if you happen to own the dust, which is the direction daily gold miners bear 3 times inverse correlation, or if you own the direction junior gold miners trust, which is the JDST, that is going a reverse split 1 for 5. So when you wake up in the morning, you know, the dust is up $1.14 right now and trading at $7.09. When you wake up in the morning and you look at your account and it's saying $35, don't think you just went from $7 to $35. You know, what will happen is that, let's say if you had 500 shares, you're going to end up with 100 shares, and that's going to be priced out at $35. They move the same way, okay? But that's just a heads up in general. What's also going 1 for 5 tomorrow morning is the S&P oil and gas, which is the DRIP, D-R-I-P. And then what's going 1 for 4 is the natural gas bear. Okay, so all of those in the morning will, the gas is doing a 1 for 4 reverse split. The rest of them are doing a 1 for 5 reverse split. So does it make any difference in the context of how they move percentage-wise? No, it doesn't. Okay, you know I suspect, you know, what's going to be really interesting here is this is where it's going to get wild. Like, just even with the dust, it's like it's $7. So you get 1 for 4 is what, 7 for 4 is $28. It's like, well, here, stay right there. We're coming right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. 877-927-6648. Let's go take a look at the good old U.S. dollar. So what we have, folks, is this. You get Yellen that's going to speak at 10 o'clock. Now, the dollar hasn't got, it certainly hasn't got strength yet. I expect you're going to see it, and this is why, though. We had come down since June 25th. You went into the, not June 25th, sorry, July 25th. You were going into the June 24th Brexit day. So June 24th Brexit, the low of the dollar index was $93.73. You had 66,000 shares traded there. Well, we came down to 94.05. So you missed it by like 250 ticks. Bottom line, that is what markets love to do, meaning you have wide price spread, accelerated volume on the way up. You pull back. As you pull back, you pull back into a sign of strength. You do it with lighter volume. And then what you're looking for is that you're looking for an additional sign of strength. Now, we haven't got the additional sign of strength yet. I expect what you're going to see is that that is going to be more than likely Friday morning. The equities themselves, however, have reacted to basically the larger market here. That's kind of how this is shaken out. Now, if we go over to the Dow Industrials, the Dow Industrials have also given a very subtle sign here. And this is what it is. So check this out. Your first high on the Dow was 18,622. That high there was the 20th of July. That high had really light volume. Well, here, let me show you what it was. 1 second. I'll do this as we're going. Put this. Okay. So your first high. Okay, July 20th. So July 20th, we did 749 million shares. And then what ends up happening? Well, then we go downtown into August. And as we go downtown, you're going downtown with 850, 870 million shares. Okay, so your correlation is that, yeah, you're at highs, no volume, you go downtown, get monster sellers. You do your next high. The next high was on August 15th. Well, we go from 749 million in the first high to August 15th, which is 741 million again, which is hard to believe. And then what do? Right in between that, you go downtown, and this was really subtle. On the 17th, we went slightly lower, and you had an expansion of volume, once again up. Yesterday was a big heads up. What yesterday was is that the S&P's got over the high, the NASDAQ got over the high, and the X got over the high, and they had every right in the world to not only get over the high, to blow the high away and go. And each one of them failed on price. They didn't fail on volume. It was light volume, but it was just a little bit more. The Dow, folks, never made it to its high. Now what you have is that you're coming off this high, and you've just broken the lowest swing point from the 17th, as well as Tuesday, Wednesday, Thursday. Say Thursday? No. Today's Wednesday. As Monday, okay? And what you're going to see as we come into this close, I expect the volume is going to continue to expand, and you're going to see that we broke them with volume. You know, so it's going to be intriguing watching how this whole thing shakes out. And one of the biggest clues out here is that IBB. The IBB, depending on how long you've been in the market, folks, what happens, the biotechs can't stand giving it up, but when they give it up in spades. And when they give it up, they're normally, by the way, sometimes the last to ever give it up. And once they give it up, though, it's over. So when you look at the biotechs had a nice counter-trend bounce, because if you remember something, the biotechs themselves made their high is July of last year. The high on the IBB is $400. We went from $400 straight down to $240. That was a heck of a get-go on the way down. Okay. Then what ends up happening? You do the counter-trend bounce, and you come right into ice. Okay. If you want to see how something comes into ice, and it's hard to believe that you can actually bounce that far, well, the IBB did it. You know, the IBB was coming into its downdraft from January 15th. The high of that's 304, the low is 273. This is on a weekly, 19 million shares. Well, guess what? It was going into it the first week, which is 4 weeks ago, with 10 million shares. 3 weeks ago, 6.4 million shares. Last week, 3.6. Okay, so you don't have to know anything about technical analysis. All you have to know is that if we weren't on computers and everything wasn't electronically, if you're walking in a store and you were going to buy a product, you're going to buy the IBB, the first time that you walked in, guess what? There were 10 million people in there, and you're trying to buy it. Okay, so great, there's 10 million people, and the price is $299. And then you came back a week later, and a week later there was only 6.4 million. And they said, hey, guess what? It's still $299. Would you buy it? You might. You might. The next week, you walk in, and it's the same price. It's $299, and there's only 3.6 million people. Would you buy it? I doubt it. That's the correlation that you want to be looking at, folks, okay? Because there's a lot of great companies in the world, and there's a lot of great things in the world, but guess what? The only thing that matters is that are there more buyers than sellers? I've seen plenty of great products that are worth a fortune, but guess what? They never went. That's just how it goes. So, bottom line, that's one side of the equation. The second side of the equation is that when you see volume coming out of something, you have to get out of the way. One of the reasons you want to get out of the way is that it's not you and I selling these things. It is when funds are selling, the acceleration is huge, and then you want to put that together with the aspect of how the ETF structures are developed, number one, and what it means when selling actually occurs. Because when selling actually occurs inside that ETF structure, it doesn't matter which way it goes. If the ETF has to get sold, every single stock inside that ETF has to get sold. If you and I sell one of those stocks individually, and it happens to be part of the ETF structure, that whole ETF structure has to get sold. So what has happened is this, is that we have many more ETFs now. Those ETFs own huge amounts of equity. So you start putting together, and great on the way up, terrible on the way down. And then what does happen, this is one of the hardest things, okay? This is one of the hardest things that is like a trip. It's like, okay, so if that's how it works, when does the selling stop so that the turn takes place again, right? And that's I'm still working on that one. But what does happen is this. It does happen, because I remember when between 2011 and the lows that were established in gold in December of this year, that's what was going on. And it was like, okay, man, you know, when does that change? But it changes. That's the bottom line. You stay right there, folks. We're coming right back. Our phone number is 877-927-6648. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And don't forget, folks, we got our man, Mr. Larry Pesavento, doing a great workshop tonight. You can check it out right on the front page of TFNN. We go over and take a look at, if we take a look at Rango Resources, so this is one of the premier gold stocks out here, folks. And if we take a look at this from January to June, what you're going to see is that, bottom line, January it's trading at a price point of $60. Goes topside. Beautiful ABC structure up to 126. Now, this is the cool thing about the gold and silvers right now. They have volume at highs, except they just extended. They did what they were supposed to do. That being said, what you're going to see in Rango, I suspect, is going to give us not only a lot of information, it gave us the first information because it made one of the first highs on July 8th. Now, we've gone from 126 to 99, so that's a 26% hit. Well, 23% hit, right? What has also happened here is that now what is going on is that it looks to me like you get about another 9 points on the way down. 92.8, $90.28. So how it comes into that level is going to give us a good heads up as to, where we're at here. Let's go over to the XLE. We take a look at the XLE. And the XLE, I would stay short. The question is that they got a half position, short position, and I'd definitely stay short. This is what you have. You needed a test of that high, so I can see why you may not may want to close it, but don't close it. I wouldn't close it. This is why. So August 18th, the low of August 18th was $69.74. The high was $71. When you get a high like that, most times it's going to get tested. Okay. What we did today, so that trading day, which was on the 18th, had a volume of 24 million. We went into the low of that today with 14 million. It can't handle it. You'd love to see it close under $69.74. It's $69.78. I think you got it, man. I think this is, you're going to be right back down the other side at $64.57. And that's going to have to do with, this is a whole perception deal, folks. And what it's going to have to do with is that you're going to see bonds want to go higher. This quarter-point deal is just going to freak markets out for, month, 2 months, 6 weeks. And if you're a bull out there, great, just put your stops in and get ready to where you want to buy these back. That's where I'd get my head at, because that's where we are at in the gold and silvers. You know what I mean? It's like, okay, you grab your bread, you wait, and then you basically just keep your hands in your pockets until you figure where you want to buy them back. Because just as you saw with the Rangel Resources, markets don't end. Bull markets don't end with high volumes. And guess what? We got some good high volumes inside the premier golds. That's what we have. But guess what? You can't also go up 200 and 300%, which they did from January to June. That's just not how markets operate. So we'll see where the rest of it shakes out. I expect you're going to see some heavy volatility out here tonight. Of course, we get another hour coming up. And we'll see where this shakes this whole thing out. One of the big heads up also is that if you look at Rangel Resources, Franco-Nevada, they're both royalty stocks. They're hitting them hard. That's a heads up in the context that the metal price itself will continue lower. Rangel's down $7, almost 10%, taking out a swing point, taking it out with volume. And one of the benchmarks, if you're in that, hopefully you've taken stops, you've got out. But the benchmark that you want to be keeping an eye on in all of the gold and silver equities, folks, is June 17th. June 17th is the big number. In this case, and Rangel, that's $67.57. You stay right there, folks. We'll be coming right back. And, of course, don't forget, I'm Mr. Larry Pesavento. Great workshop. Couldn't be a better time to do it. Right on the front page of TFNN. Dow right now is down 75. You get the NASDAQ off 47. S&Ps are down 11. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Asim in Dallas.
Hi, Tom. I love your show.
Thank you so much.
I've been listening to you since 2001, from my Seattle days when you were on a little station there.
I appreciate you growling and prowling with us out here, man. Thank you. Well, listen, thanks for bringing us from Seattle to Dallas, man. Appreciate it.
Yeah, I love all the hosts. I love your show. I'm addicted to it.
It's Hotel California. It's wicked, isn't it, man? Thanks.
All right, Tom, nice to talk to you.
Have a great one. Have a safe.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day in the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Cultivate wisdom. You don't need to accumulate knowledge to become wise. Anyone can become wise. When you become wise, you respect your body, you respect your mind, and you respect your soul. When you become wise, your life is controlled by your heart, not your head. That's the number, folks. No doubt. Market-wise, Guys, let's take a look at it out here. We have the Dow Industrials down 65, NASDAQ off 42, S&P's down 10, gold contract down $18.60, trading at $1,327 an ounce. Silver down 40 cents at $18.51 an ounce. Platinum off 25 bucks, $1,079 an ounce. Copper down 3.5 pennies at $2.08 a pound. Light sweet crude off $1.34, 132.07. 30-year bond down 8 ticks, 172.06. King dollar up 236 ticks, trading at 94.73. The euro's trading at $1.12, and the yen is trading at 100.47. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. Here we go. So, volume out here today, you did 68 million. Made a high yesterday and rejected the high with 53 million. You're coming into 75 million. So we're down $1.12. You're 217. It looks to me like, guess what? You're going to get some follow through tomorrow. We'll see how it shakes out. It'll go after 217.02, which is not a huge amount. But bottom line, we'll see whether they get an expansion of volume or not. Because the number, folks, out here is going to be 10 o'clock, Janet Yellen, Eastern Standard Time. You know, the way this market is traded right now, it looks like the Fed wants to go up, more than likely in December. If it's ever, December's my take on it. But hey, guess what? We'll find out. I suspect no matter what she says, the market is going to react that, hey, she's going up in December, and, you know, it'll basically do a nice little pullback. So the Qs have given quite a bit of information out here. And this is what it is. So picture, you know, my program starts every day, 3 to 5, right? So we're watching the volumes all day long anyway. Bottom line, you had a monster acceleration, man. And that's not you and I selling into this market, folks. This fund selling into this market. We started the 3 o'clock hour. We were at 11 million shares. It's 17 million shares. So there was 6 million shares down in an hour. They're getting out of the market. What do? The Qs go down 81 cents. You did 17 million shares. You're coming into the $116.43 that had 15 million, which, by the way, the correlation between highs and lows, the 15 million actually is an expansion of volume on the way down. The first high that was generated out here, which was the August 15th high inside the Qs, was 11.7 million. We tested that yesterday with 11.9 million. We come down today with 17 million. See ya. Don't want to be ya. Lower prices are coming at us. Gold contract. What do we have with the gold contract? Gold contract today, 207,000 contracts. You're down $18.50. You're trading out at $13.27. Now, what I expect we're going to see with gold, this is going to be pretty intense overnight in gold, and this is what I expect you're going to see. ICE is set up at 13.42. No, sorry, 13.18. 13.18 is your swing point. I suspect we're actually going to jump ICE. We're going to jump the creek. And if that's what we do, you're going to see, you know, gold down at 13.09 tomorrow. You know, that's kind of how it's set up. You're hammering into the lower end of the consolidation, and you're hammering in with volume. So if we go over to the silver market, you're going to see, we were talking about this the last couple days, silver had already given us the clue, because what had happened with silver is that silver broke its whole consolidation on Monday. You know, silver came down monster volume. You know, when it broke down at 91,000 contracts, and it broke the consolidation. So guess what? Silver let it down. Gold is probably next. The gold and silver equities actually were the leader of the physical metal. They were the leader on the way up, and they're the leader on the way down. You had the XAU down $8.50 today. You're at $95.34. This blew away its swing point. It's going to have the volume. All these equities have monster volume. You know, bottom line, the XAU, it looks to me like it's on its way down to 82. Right now, you're at 95. The Gold Bugs Index, what do we have with the Gold Bugs Index? That was down $19.50. You're at 237. This looks like next stop is down at like 200. Yeah, so you're talking about some major hits out here. If we go take a look at Barrick Gold, and Barrick was a no-brainer, meaning not a no-brainer, but Barrick Gold, folks, what had happened is that they were all great on the way up. And I was watching Barrick in particular because of George Soros. He got into it, and I suspected he had got out of it because the acceleration, the amount of money made on the way up was phenomenal. So if you take a look at Barrick in January is trading at $6.90. In June, it's trading at $23. If you don't get out of something from $6 to $23, you're out of your mind. Bottom line, guess what? He got out of all of it. That's what we were talking about that last couple of weeks. Why? Because it was disclosed. Well, guess what? Now you get the sell down. Now Barrick can come back to $14 in a heartbeat. And those types of corrections, by the way, that still is only a correction in a market that wants to go higher. It's just that the expansion up was so dramatic. We go take a look at the oil market, what we have with oil. You have two different things happening with oil. Supply numbers come out today, and there's good supply numbers. So it's down $1.35. What I expect you're going to see, which is going to put a little more pressure inside the oil market, is if, in fact, the Fed is going to go up a quarter point, you're going to see the dollar index go topside. And dollar index going topside would say, okay, there's going to be some more pressure in the oil market. Right now we're at 46.75. This can get back down to about 44.59. If we go over to the 10-year bond, what you're going to see with the 10-year bond is this. So right now we are at 132.07. This is what you have. You have the lowest swing point that is a B point, is a potential B point of an ABC down, is 132.11. I expect we're going to be going after that. This will wait until her speech from Jackson Hole, which is 10 o'clock in the morning, Eastern Standard Time on Friday. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow closed down at 65. NASDAQ off 47. S&P's down 10. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go over to Hewlett Packard. Hewlett Packard closed at $14.40. That is trading at $13.75 right now. Let's see what they have to say number-wise. So their earnings were 45 cents. Well, the estimate was 45 cents. They made 48 cents. So bottom line was better. Their revenue was $11.9 billion. So this gets interesting. This is, so of course, Hewlett Packard, we all know Hewlett Packard. Now they beat top line and bottom line. But guess what? Bottom line is that the market is saying, well, you might have beat, but guess what? You either didn't beat enough or we thought you were going to do better. Because you're trading down, let's see, 65 cents right now. And at that level, that means you're going to do, yeah, you're going to be, yeah, you're in the lower range. So check this out. So Hewlett Packard had got over the $13.90 on July 12th. It's either July 12th or July 14th. That's been going sideways since then. And it's going to gap right underneath it. So Hewlett Packard's going to start making its way back down into this $11.51. Workaday, I believe this was this. Yeah, Workaday closed at. This is a funny name for what it does. You think it has something to do with hiring people, but this is enterprise cloud-based applications. This closed at $79.65. That's trading at 82 right now. That's up $3. Let's see what this has to say. Okay, the revenue was $377 million. They had an estimated loss of 2 cents, and they lost 4 cents. That's pretty wild. You gotta love it. So watch what they did, though. This is what the difference is. What markets are always looking for, they are looking for growth, and this is a pretty cool situation here when you look at it. So the estimate we lost was 2 cents. They lost 4. The revenue, however, estimate was $372 million, and they made $377 million. So now you can see what ends up happening there. The market's forgiven, and not only forgiven, the bottom line is that the market is bidding it up. Because what does happen, with losses, folks, it may be a cash loss, it may be a depreciation loss, it may be just a write-off. There's a million different things that can happen inside of that as to where that loss is. Guess closed at $14.90. That's trading at $16 right now. Sorry, folks, excuse me. This stock has been a mess. Let's see what they have to say. It'd be pretty cool if this can make its way back. Okay, so Guess, their revenue is $545 million. Second quarter. Earnings per share was 38 cents. They see, that's the second quarter. The third quarter, they see earnings coming in from 11 cents to 16. That's at the low end. They miss on revenue. Now, this is just the yin and the yang. This is pretty wild, man. But they're bidding it up a bit. Now, this equity here, talk about getting killed, man. Wow, this is intense. I guess no one's buying Guess clothes. So this equity from the last high, which was in 2010, $47 down to $13.80. Pretty intense. WSM, is this Williams Pipeline? Let's see, Williams Sonoma. So Williams Sonoma, that closed at $54.14. That's trading at 53. Let's see what they have to say. So their net revenue is $1.1 billion. Same store sales was up 0.6%. Earnings, the estimate, bottom line estimate was 58 cents. They made 58, and they're just shy on revenue. We take a look at that chart, pull that chart up. This is another equity that's got killed. That's gone from $89 down to 47. And you know what gets interesting, folks, about some retailers versus others is that it seems to me like I love Williams Sonoma, okay, but what ends up happening, I really almost never buy anything there, because what happens is you can go in, you can see all this beautiful stuff, and then you turn around and go on Amazon and get the exact same thing for cheaper money. So I mean, unless you need something very quickly, and most of the stuff that's in Williams Sonoma, it's not something that you need quickly. It's something that you actually want, or you want for a present. So bottom line is that I think they're gonna have a tough time till they figure it out. Like Best Buy has figured it out as to how can they make money and bring prices down where you actually would pick it up. Because what also happens is this: is that the larger items, why do you even want to pick up and bring around the mall and put in your car? That's even a bigger one. The bottom line is, as our man Duffy says in the Den right now, retailers have become showrooms for Amazon. It's so true. Can you imagine? Imagine something. Imagine you're Bezos and your executive team, or you're just working there, and you say, "This is so cool, man." Everyone all these retail stores are our showrooms, right? We have all the products at cheaper price. They don't have to go to their car. They don't have to get out of their house. It shows up. If you like it, you keep it. If you don't like it, I don't know if it happens with everything. I know with Prime, what ends up happening, folks, everything you get has a return right on it. You don't like it, you just a sticker and you stick it right back, which is just amazing. Bottom line, a lot of these companies are going to have to figure out how do you compete with that. Now, Best Buy looks like it has, which is great, because the bottom line is that that stock had a, hard time for long period of time, and they come out with some good numbers. And bottom line, it's you get some corrections, but Best Buy looks like it's not only off its bottom, but you're going to get some traction in the future. That's how that thing looks at this particular point. Our phone number is 877-927-6648. Volume on the indices, this is what we have. You did 756 million on the NYSE, which is just minimum volume. On the NASDAQ, we did get a expansion of volume. So the NASDAQ, once again, is given a heads up that lower prices are coming at us. The IBB basically rang the bell once again. The iShares NASDAQ Biotech Index, folks, had a monster reversal. We traded as high as 299.25 today. The high that I was trying to get into is 299.48. We got over it. You closed under it, and then the sellers came in, and they were fast, furious, all of the above. It actually closed in the lower range, the lower range being a close under $287.77, sets up that it can go all the way down into 240. We get a question in the Den of Danny from Atlanta. Did Soros sell ABX? Yeah, Danny, he sold ABX. We were talking about that a few weeks ago. He sold them all, man. Sold them at the highs. Gotta love it. Buy them at the lows, sell them at the highs, suck them in, drain them down, and buy them again. You stay right there, folks. We're coming right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And folks, if we go over to Mylan Pharmaceutical, I want to show you something here. So Mylan Pharmaceutical, folks, monster company, okay, you know, bottom line, you know, pharmaceutical company, huge company. This company takes in $11 billion a year, right? Well, when you take a look at just the last couple of days, what you're going to see is this, okay? Yesterday, you sold off from $47 to $45, today down to $43. Now, what it's down because people are selling it. But what you also have here, and this is where I can show you that ethically, greed-wise, you take people to the cleaners, guess what? You're not going to have, you can have an equity that can go high for a period of time, then you're going to get destroyed. People are walking out with their money in Mylan Pharmaceutical. What I expect some of this is about is that this is, you know, the stories the last couple of days about the EpiPen. The EpiPen, folks, they've priced this up like a Valiant. They went from $100 to $650 for the same product, you know, over the course of 3.5 years. Bottom line, the equity used to trade at $76. It's at $43. They're not only going to lose money, it looks like it's going to be an ABC structure on the way down. And guess what? That's going to change too, because price gouging, guess what? In the medical business, price gouging, and people can die from being allergic, see ya. It's, you know, you can do that for a certain period of time, but if you go look at Valiant, you can see what ends up happening. Bottom line, when all said and done, stock's going to get destroyed because Valiant was the leader in buying drug companies, taking drugs that had been on the market forever and then making them from, $1 to $10 within the span of, 17, 18 months. And the reason that they can get away with it and have got away with it is that it's a third-party payer. When you have a third-party payer, which we do in whether it's the insurance system or our health system and insurance, that is, bottom line, how you can get away with it. You never could get away with that if, in fact, it's a normal type of business and that the business had to sell the product without a third-party payer. If you're young and you're looking for, bottom line professions, folks, if you can get a profession that is a third-party payer, what I've seen through the course of my life is that that's where the spread differential is bigger, that's where the profits are much larger, and that's where the growth is a lot bigger. And because it has to do with the aspect of the supply and demand, because it's not just the supply and demand. What you're dealing with is that you're dealing with the third party, and then you're dealing with the bureaucracy that is not. It's not that the bureaucracy is not getting paid enough. It's that it's very easy to pay off that bureaucracy through the aspect of soft money in order for that third party to accelerate and charge outrageous amounts. And if you wonder why people get fed up, that's I'd say that's one of the big reasons. I mean, it's one thing when you have the money and you can buy the EpiPen. It's another thing when you don't and something happens and the person's in trouble. Maybe dies. Allergic reactions, I really don't know. I guess you can die from them, but I know people have a big problem with them. There's no doubt. But Mylan, when I was watching Mylan trade out here today, I says, "Oh man, what a trip this is!" Because see, what you can learn from this is that the aspect of money moves and money moves very quickly. And so big money decided that they saw that writing on the wall, and guess what? They're saying, I want to be out, and I want to be out in a big way. And you can. You can die from a bee sting can do it. Yeah, you can buy allergies are a big deal. So I think that's just the beginning. That EpiPen, we'll follow that, but I suspect that's going to change. Somehow that's going to change because that makes zero sense, man. Absolutely zero sense. We go take a look at the let's go take a look at the XLE. So the XLE, folks. Oil basically came off its highs. XLE hasn't. Now check this out. This is pretty cool. So the XLE is trading at $69.81. It tested its high today. It tested the low of the high, which is $69.74. And we closed at $69.81. You did 16 million versus 24 million. If we go over to ExxonMobil and Chevron, Exxon is the largest weighting structure. That was up 30 cents. Not big volume. Chevron was up 52 cents. Same thing, not big volume. Now, both of those will have to give it up for the XLE to pull back. But I do expect that will happen. If we go to the XME, let's see, what's the... Oh, the XME. This is the metal and mining ETF. This poor thing. Okay, so yeah, the metals and mining today, folks, took it deep. There's no doubt. XME, that took out the swing point, took it out with volume at 25.84, down $1.36. If you go to the GDX, what you're going to see out here, let me see. You're going to see inside the GDX, it was down $2, had 160 million shares, 160 million. Your swing point, folks, had 89 million. It just ripped it apart. Now, the correlation on this GDX is saying that now it wants to trade at 22 bucks. You're at 26.97. This is what you have to wrap your head around inside the GDX or inside any of the ETF structures. So, watch what happens. The GDX is down 2 bucks. Inside the GDX, the largest weighting structure is Barrick, which is 10%, Newmont 9.8, Goldcorp 6.3, Newcrest Mining 5.9, Franco-Nevada 5.8, Silver Wheaton 5.3, and Eco Eagle 5.3, Wrangell 4.4, Anglo Ashanti 3.4, and Kenross 2.6. Now, those just happen to be the top 10 weighting structures. So what happens is that when the GDX gets sold, which it got sold down today, what happens is that the ETF structure itself has to do what? They own all these stocks, folks. They have to sell all those stocks. Now let's go the other way. Let's go the other way, that you and I just happen to own some of those stocks there. When that's going down, it hits our stop, we sell it. What do you think happens to the GDX? The GDX goes down to a lower price. What does that do? That turns around, takes the GDX, and they go down. That whole chicken and egg deal is pretty intense in the aspect of how this works. And watch, I'm going to bring you over to Barrick right now so I can show you how this works. If you're watching Tiger TV, I'm bringing up the security ownership for the largest owners. Now, what you're going to see is that Van Eck was one of the largest owners of Barrick. Well, guess what? You're going to see that change, and that's going to change pretty dramatically in the next few days, because what you have there is that is going to be inside one of their funds. And as the fund goes lower, the bottom line, they have to sell into the marketplace. Okay, so that's what makes an acceleration on the way down. When they're going down, just the opposite. When the trend's going with you, that's the acceleration on the way up. You stay right there, folks. We're coming right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go to Kevin in New York. Hey, Kevin, what's going on?
Hey, Tom, how you doing?
I'm doing great, man. Yourself?
I'm doing good, thank you.
Cool, man. Thanks for calling. Thanks for holding, man.
No problem. I got a question for you on the IBB.
Yes.
Just trying to help me understand volume and swing point. So, I'm watching the IBB towards the latter part of today, and it's sitting right on top of the April 6, 2016 high of 285.86, right? But it closed below the April 7th high of 287.77, which you highlighted.
Yeah.
And I just want to ask you if there's any significance to the April 6th versus April 7th.
Okay, so this is a great question. So what happens is this, folks, and this is why I highlighted the 287.77 number. What happens is this, is that I'm going to, if you happen to watch on Tiger TV, I'm going to line this up so you can see kind of how the ranges were set up here. And what you had is that the IBB, folks, was in a trading range, and the top of that range, you know, was, to me, was 287.77. Even though Kevin, so that was the April 7th one, right? And then you know, on the 22nd, it goes a lot higher. Okay. What happens is that when you're coming back inside a range, the more bearish would be like, and I'm just trying to stay the most conservative on this, right, is that a lower price, meaning I was looking at it, I says, you know what, man, it's the because I'll put this on a weekly for a second for you, is that the 287.77 actually would give us more information that the confirmation is there, that now it wants to go, it's a false break topside, and that it would want to get down to the lower end of that consolidation. So that is, you know, what you're hearing off me. Do you know what I'm saying?
I see.
Yeah.
So the difference between the daily and the weekly.
It's the difference in the daily and the weekly. And what I always try to do is that what you don't want to do is pick, like a consolidation is, the prices are never going to be like exactly the same. So what you try to do is, so let's picture if we took 289.70, right? Which 289.70, folks, was the high of April 22nd. And you could do that. You could say, okay, if it comes back inside that, it's back in the lower end of the consolidation. But to be more conservative, I took the lower number because of the fact of saying, you know what, I think it should get back inside that level, because then I'll feel more comfortable that, yes, it's not only back inside the consolidation, but you're deeper into the consolidation. You know, this is you're hearing an art more than a science here. Do you know what I mean? That's the reality. And that's a lot of reality, not in the pattern setup or the Fibonacci setup, but inside the aspect of technical analysis. There's a lot of that there. Do you know what I mean?
Yeah. Like I said, I agree. There's a lot of art here. It's interesting to me when I look at the 10-minute, the last, I don't know, hour or so, it's just laying right on top of that 285 and change number. So
I absolutely agree. And what Kevin's saying is this. It's unbelievable, folks, that things can trade at $280, $300, $700, $150, and they lay right where the support is. No, I agree, man. And it's like, okay, like, how does this work? You know, listen, I've always been intrigued in that. What does happen is this. The longer that you're in front of a screen, more subtle that you know that, okay, man, bottom line, and in this case here, you know, you can see on a 10-minute chart, you can see at 20 or 40 past 2, they start laying into this, man. You can see the volume expanding, you know, before it broke down.
Yep.
You know, and what I try to do is bring up very quickly, you know, what tends to happen is that when an operator is laying into a stock, either on the way up or the way down, what happens is that they start throwing stock at it, 10, 20,000 at a time. And most of the time, believe it or not, which is pretty cool, I do the same thing. If you're trading 5,000 lots or 1,000 or 10,000 lots, you throw the same thing. You just get used to it. So what I try to see is, okay, is it the same person? You know, and you don't know, but you do get a better indication that, okay, man, someone's going to try to break it here, you know, on the way down or on the way up. And that's why I always say that if you're coming into a swing point, let's say on the way up, and you're pushing that swing point and the volume is accelerating before it, that is an operator coming in saying, okay, I think this thing's ready to go. I want to see if it will goal number one and how many more cells are above those swing points. Because that's where all the cells would be, folks. They'd be right above the swing points, and the cell stops on the way down would be right below them. You know, so. And you know, when the IBB turns, man, and it turns big, and the IBB gave us a big heads up today just for the market. Hey, we'll find out. I mean, to me, that IBB is really signaling that, okay, this, because the broad market didn't get taken apart. It's not even close. The broad market, look, the Dow's only down 0.3%, Nasdaq's down 8%, S&P's are down 0.5%, which is nothing. Yeah, now you start looking at the IBB, though. You start looking at the metals. You're talking about serious destruction, man. So.
On the IBB, just one more question.
Yeah.
Because I heard your discussion on Mylan, and of course, it's got a lot of that negative attention over the last couple of days, and I can't help but remember the last time these pharmaceuticals got some negative attention for price increases, the IBB took a big hit. Hillary Clinton making noise about it. Do you think Mylan lit the fuse on the IBB again?
Yeah, they did. It did. Because what Kevin's talking about, the last time, folks, was Valiant. Valiant started at 400. No, IBB was at 400 when Valiant blew up. Well, guess what? In 4 weeks, IBB was at 284. That was Valiant blowing up. What happened with Mylan is there's two different things. Now check this out. This is going to be crazy how this is working out, folks. So I think everyone's upset about the Mylan deal, right? Including Hillary Clinton. I don't know if Trump was out there yet. I have no idea. But this is what's going on. I think, let me just see this. I think the CEO of Mylan is the daughter of a senator, and she's Democratic. Let me just see this for a second. I remember this like a long time ago. Heather Birch. Let me just pull this up. 1 second. Yeah, it is. Yeah. The CEO of Mylan is the senator, the daughter of a senator from West Virginia, and he's a Democratic senator. So this is going to be a problem, man.
You can't make it up. You can't make it up.
That one there. That one there is going to be a trip, man, because it's going to be like, okay, you're greedy. You go from $100 to $600. You know, Democrats supposed to be helping people, right? You know, that's my, bottom line is that, okay, how are you going to spin this one? Well, we'll find out. So, seriously, crazy, man. Okay, brother.
Well, listen, thanks. Appreciate your help and enjoy the show. Thank
Absolutely, man. Have a great one. Have a safe one. And folks, coming up at 5 o'clock, if you haven't heard yet, our man, Mr. Larry Pesavento, he's going to be doing a great workshop, 5 to 6 o'clock tonight, dynamite workshop. Check it out on the front page of TFNN. You're going to get a full newsletter for a full month. You're going to get a great workshop, 5 to 6. Couldn't be a better time to do it, folks. Volatility's back in these markets. Just stay right there. We're going to be coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And, you know, one of our Tigers was just saying at den, we were wondering what the drop in the market cap was. The drop in the market cap from Mylan, okay, in 3 days was over $3.2 billion. They have 500, let's see, okay, 49 to, $6 times 535 million shares. So there you go. See ya. Don't want to be ya. Big numbers, no doubt about that. So let's go take a look at overseas. The UK last night, folks. Today it was down $32. No big deal. That's trading at 68.35. DAX in Germany. Was up $30 today. That's trading at 10,622. If we go over to the Hang Seng, what you're going to see. Hang Seng last night came down 178. We're trading at 2280. And I expect what you're going to see down here, this is going to try to get into like the 22,500 tonight. That can be like down $300 tonight. So how this trades tonight is going to be a big deal. When Australia opens up tonight, folks, they're going to have a problem. The main reason, of course, Australia's going to have a problem is that because the metal and mining in general, okay, came down not only hard, but the wide price spread, accelerated volume, all of the above. And that, no doubt, is going to be a problem for Australia. That's going to be a problem from South Africa tomorrow morning. If we go and you want to take a look at the composite, the TSX, up in Canada, this doesn't even look like it was open today. This is interesting. That was only down at $1.38. That doesn't even make sense. I expect that's gonna get killed tomorrow. Then that's interesting, man. So we sold off a lot harder than they did. Yet I am gold down 10%, but that's gonna get sold down a lot more, man. That's the bottom line. What I do expect you're gonna see out here tonight is that you're gonna see some pressure in the marketplace, and this whole market right now, folks, is getting set up for what announcement Janet Yellen is going to be talking about at Jackson Hole, 10 o'clock in the morning, Friday morning. And is it going to be a big deal? I think the market's saying, yeah, it's going to be a big deal. And more than likely what it's going to be is that, listen, the numbers look good. We've told you we're going to go up at least twice during the year. Well, if that's what they do, guess what? That's what's going to come out. And that would be the December rate hike. Now, what's really cool is this. You can imagine, it seems that every single time that the aspect that the Fed says they want to go up, right? If the market reacts first, which the market is reacting, by the time the December one comes along, there's no way that they're going to go up. Why? And this is what's so cool about being in the metals market. Bottom line, we're sitting here with our hands in our pocket just waiting for this whole correction to get over with. And, bottom line to me, this is a large correction. It's going to go a lot lower. That being said, what I expect is going to happen is the market's going to go a lot lower. And guess what? They might want to go up as much as they want to go up, but the market itself will be in a correction, and they won't go up when the market's in a correction because the amount of wealth that gets sucked down the drain in paper is pretty substantial. So when we take a look at the S&P, we bring up the cash S&P. Well, the cash S&P right now is at 2175. Well, man, that can go back to 2100 in a heartbeat. People, for some reason, will think that that's bad. Bottom line, it's not. If you want to come into Larry's workshop, go to our website right now, TFNN, right on the front page. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking here, right here, 8 o'clock tomorrow morning. Go get them, folks.